Hey guys, welcome back to another video by Fully Informed Trade, or FiTrade for short. My name is Alex, and I'm just going to go ahead and review the stock market and the currency market's correlation to the stock market just for today. I have a lot of important plays to go through, so I will be taking up a small portion of your time, and I'll be talking relatively fast, so please bear with me. Alright, the first chart is a chart of the dollar index. I will point out the fact that the dollar index has fallen by around negative 0.26%, so it has fallen negative 0.26%, and the Dow Jones Industrial Average has been positive by around 0.25, 0.29%, somewhere around there. So pretty much the Dow Jones Industrial Average had a perfect inverse correlation, for the dollar index did go down, or the Dow Jones Industrial Average did go up as much as the dollar index has gone down. So as long as the dollar index continues its downwards trend, chances are you'll see the Dow Jones Industrial Average continue its upwards trend. Now I do want to point out the fact that some people are kind of fearful and leery about the dollar index, but I do want to point out that if the inverse correlation no longer holds, and the UUP and the dollar and the Dow Jones Industrial Average move in synchrony, once we reach that point, I'll be one of the first people to notify you of this, you guys. So don't worry too much about it. Just focus on the inverse correlation just for right now. Alright, so let's go ahead and look at the next chart, which is Sapient. Sapient is trading towards the bottom of a multi-year trend line. Now I do want to point out that if you guys are going to trade this, I recommend it mainly because of this thought process. You have a falling star. These are generally positive, at least towards the bottom of a channel, or the bottom, towards the bottom. And you know, that being said, since it is towards the bottom of a multi-year channel, this is very positive. You also have an engulfing pattern that engulfs the previous candle body that could be seen as something positive. And if we do consider a trade at around $12.25, then chances are we are anticipating a move somewhere around $13. That would be around $1.75 in profit. And if we were to set up a stop, that would be somewhere around 12, give around, you know, I'd probably consider a stop right below the $11.80. So maybe $11.50. So if things don't work out, you would lose 50 cents. If things do work out, we would anticipate a trade into, give or take, around $13.50, which would be more or less, give or take, $1.25 in profit. Now $1.25 in profit would more or less be considered pretty good. You know, I personally think that if you could achieve, you know, a 2-to-1 risk ratio or 3-to-1 risk ratio, that's a very favorable trade as far as Sapient is concerned, and we would be anticipating somewhere around give or take, 5 to 10% profit, but 10% profit if it reaches $13, and around a 3 to 4% profit if it trades around $12.60. Keep in mind that there's going to be some resistance at $12.60, and previous areas of resistance can be resistance again, so you want to close your trade at all costs once it gets near $13.40. Let's go ahead and look at Cisco. Cisco is another stock that I've been eyeing very closely. I feel that Cisco can be an awesome trade mainly because of the fact that you see this chart trading towards the bottom of a multi-year channel, a channel between towards the beginning of 2010 and towards the beginning of 2011. I do want to point out the fact that every time it does get towards the bottom of this channel, sometimes it breaches it a little bit, but once it gets towards the bottom of it, chances are it trades up and at least trades into the moving averages, and sometimes it breaks above them to touch the upper area of the multi-year trend line. But your best area, but your best bet is the 200-day moving average. If anything, anticipate this area to be resistance, this area, this gap area, previous area of, previous gap bottom, previous gap top. You know, that being said, you know what? I honestly think that this is going to be a pretty good area of resistance. However, it's not going to be good enough to stop this from trading even higher than that. And I would anticipate that you guys watch out for the 200-day moving average, as it will be a huge barrier. But if it does trade into the 200-day moving average, you're pretty much anticipating a 20% profit on the trade. That would be very excellent. If it were to get to around $19.50, that would be more or less $1.50 in profit, which would basically put you somewhere around, give or take, 5 to 7% profit expectation. The moving averages, since it's going to be a $1.50 move, that would give you a 10% profit expectation, maybe around 8 to 10%, 5% if it touches this trend line. And this trend line would equate into around a 25% gain. The 200-day moving average would equate into a 20% gain. Now, the safest way you can play this is to wait for the 200-day, wait for this market to trade wait for the market to trade into the 200-day moving average. Now, as far as stops are concerned, I would put a stop at an even $18 and wait for it to trade into $22. Even $18 stop would equate into around a 50-cent loss, 65-cent loss, and if it were to trade into $22, that would equate into around a $3.50 profit. So basically, you do have a 7-to-1 risk to reward ratio. That being said, I think this has great potential as a short-term trade. Let's go ahead and look at the next chart, which is going to be Microsoft. Microsoft has somewhat of support right around here. It is trading towards the bottom of a channel, and it also had a bottoming pattern right around there, which is basically a hammer pattern. Hammer patterns are generally positive towards the bottom of a channel. If I were you, I would set up a stop right below this trend line and anticipate a trade into $28 for around a 3 to 5% profit. Let's go ahead and look at the main reason why this is going to be a good area of resistance. Chances are you see this trend line right here. That's the top area of a channel. On top of that, you have a double moving average. Double 20 and 50 moving average is a good area of resistance, and it should not be tested. I would just sell my positions into it. Let's go ahead and look at my next chart, which is going to be NIVS Intellimedia. NIVS Intellimedia is a company that has been hyped up quite a bit in the past, and since it has already been hyped up and it is starting to pull itself back, I would recommend you guys to continue going into the short side on this trade because it has more momentum to the downside. I'm going to go ahead and show you the multi-day charts, and I will show you that I did make a very negative announcement at around the end of Tuesday. So a short on Wednesday would have equated at around $3 and already has gone down by around 25 cents. 25-cent loss on a $3 stock equates into basically already a 10% gain, which is pretty good, but there's more room to the downside, and I do want to point that out to you guys clearly. $2.40 fall from where we're sitting at right now, $2.74. That would basically be a 35-cent profit. A 35-cent profit would equate into more or less give or take around, I'd be willing to say around a 15% profit into $2.30, and you'll get, and if you go into this area of support, which is triple support, we got the 250 and 20-day moving average. If you hold into $2.30, that's when I really want you guys to get out. That in turn will create around 20% in profit. So this is a great short opportunity, and I will stick with that on NIVS Intellimedia. Let's go ahead and look at JP Morgan and Chase. JP Morgan and Chase has a double topping pattern. Chances are it will pull out, but I pull back quite a bit. But if I were you, I would set up a tight stop right above this moving average, which would basically put you at around a $48, $50 stop. That would leave you with a 70-cent loss if it doesn't work out for you, and I would anticipate a move down to around $46 even. That in turn will create around $1.80 in profit. 70-cent loss versus $1.80 in profit. That gives you a 2.5 to 1 risk ratio. You would gain 2.5 more than whatever you could lose on this type of trade, and if it goes even lower than 46, I would then put a tighter trailing stop on it and then anticipate a move down into 44. Right now, if it goes to 46, that would be a 5% profit. 44 would equate into a 10% profit. Let's go ahead and move on to the next chart, which is going to be Evergreen Energy. Evergreen Energy is another stock that I also did recommend a short on. It had lower highs, and right now, if it accomplishes lower lows, chances are you're going to see a continuation of the downtrend. I recommended a negative. I was pretty negative on it around Tuesday evening onwards, and for Wednesday and Thursday it has just continued its downwards pace. If we go ahead and look at trade triangles already indicate a negative trend, and we also have a negative trend indication based on this clean area support that has already been broken. So chances are this stock will go lower, and once it does, chances are it will go all the way down to wherever it has come from. Chances are support will be at $3 and $2.50. I don't really know where the bottom is for the stock, but I do want to point out that if you set up a pretty tight 5% trailing stop, you could aim to make around 20 to 30% profit expectation. That's my expectation of profit on this trade. Let's go ahead and look at the next chart, which is going to be silver. Silver is really overbought based on this trend line right here at around $30. It has already broken right above it. It's trading at around $31.60 per ounce. And if I were you guys, I would anticipate negative movement in the SLV. Chances are, if you're going to trade the SLV, I would probably consider buying some silver put options once we see some sort of topping pattern and a negative candlestick once we get that negative candlestick and the dollar index starts to reverse in direction, chances are we could see silver pull back, and once we see silver pull back, I will recommend a put option on silver. So once it happens, I will let you guys know, and you guys will be at the cutting edge of it. Let's go ahead and look at Staples. Staples is another chart that I do like. It has a plateauing platform. You have support, a previous area of support, and then you have an ascending support. So double that with a descending inverse hammer. Chances are you're going to see the stock go higher, and chances are if you were going to set up a trade, you would probably set up some sort of stop at around 21.20, and then that would give you a 30-cent loss. And if it were to work out in your favor, you would probably end up selling your position at the double resistance, or at the double moving average, at around $22.60. That will give you more or less a dollar gain. A dollar gain would basically mean a 5% profit with around a 1% to 2% risk, a 1 to 2% risk, which is basically a 2.5 to 1 risk ratio. That does it for me for today, guys. If you guys want to see more of me in the coming weeks and months ahead, please be sure to subscribe on YouTube. And if you guys want to get access to this charting software, please be sure to go ahead and check out the link below this video. Take care to all of you guys, and I'll have more for you guys in the future. Bye.